Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is Ticker Request Live for Sunday, September 14th. Going to be streaming for about an hour. I got work early in the morning, so I can't stay up too late tonight streaming. And before I get into any requests, if you guys do have them, I thought I'd just do a little bit of an overview of what I've done with the channel over the past week. Maybe some of the stuff you guys like, maybe some of it you don't so much. But yeah, I just wanted to share what I've been doing. So I'm just going to scroll down and kind of start from really like last Saturday. I put out the daily Ethereum video going over the ETFs and treasuries, and also Crypto Corner Stacker as always. And then I believe on Sunday put out this AMC video. And yeah, I'm hoping that we're putting in higher lows. That's going to continue higher. But, you know, we're going to have to wait and see. And then actually also on Sunday, I put out this iExec video. It's been consolidating for the past few weeks. You can even see it in the thumbnail there. But it did have this really nice move up. So I'm wondering if that is going to be going a little bit higher, soon. So, but then also, Ethereum treasuries videos, did a lot of them. But then I also did this video on Apply Digital, and looking at where that hand is pointing to, you can see a little bit of a hammer candle from there. It's gone up, I believe, about 34% over the last week. But when I did put out the video, it was a little bit higher. So maybe 25 to 30% up from where I did point that out. Did seem like it was ready to launch, so I'm proud of that video. Unfortunately, I don't have a position in Applied Digital, but that's totally fine. And then also, I did put out this video on NEO. This is one I'm probably most excited about. Looks like it came out about 3 or 4 days ago. And really just identifying that, volume looks like it's kind of broken out, and this gap down was potentially going to launch it higher. And, I did have a covered call with a strike of 450 for this coming Friday. But I ended up buying that back because I'm actually pretty bullish about NEO. One of the things about the videos that I put together is, a lot of it is really just like my thought process and going through the chart. And sometimes I realize, oh, well, maybe I should change my position. And yeah, I'm bullish on NEO. And then beyond that, did another Crypto Corner Stacker. Whenever, you see something like higher and then there's a pullback, in my view, it's an opportunity. So I think that's what we're getting across crypto. And then I did put out some videos on GameStop, getting some cards, and then opening up my first pack. Yeah, so hopefully those are cool. But I imagine I probably won't be doing too many of them, but I might be. And I definitely look forward to spending some time with the, let's see, what's it called? The Power Packs, GameStop Power Packs website. Because I think, just dealing with the physical cards, not necessarily that fun. I think that you end up wasting more money on them, whereas you pull them digitally. I think that's a little bit more exciting. But anyways, just kind of wanted to share that. And also from the channel, I did put out this poll regarding the cards. And it looks like we do have a tie. It was 1-1 before. Now it's 2-2. So I did open up the first Cardsmiths pack. The next video that I do will probably be on Star Wars. But if, you guys can change that if you do put some more votes in there. And yeah, so should be just kind of a fun break in content, not only charts, kind of experimenting with things, because it'd be great to get the channel to grow and become, more than what it is right now. But it's kind of tough, always going over the charts and whatnot. But yeah, and it doesn't look like I have anybody in the chat just yet. It does look like I'm streaming. It says to start, click the button. Yeah, I am a little bit confused. I might actually check this over here to make sure. I am going live. So that's good. Looks like there's one person viewing maybe. But yeah, I'll just come back to the charts over here. And if you guys do have some requests, happy to go over them. And maybe hey, Anon, what's up? And so I will, because I have the capability to do this, I might pop chats up. Hey, Anon, what's up? Yeah, if you have any requests, happy to go over them. And I might just poke around if there aren't any specific requests. I mean, really for me, I've just kind of recognized that, I feel like I do better analysis when I have more conviction or I understand the stocks better. And, one that I feel like a lot of people have been pretty excited about is Open Door. But I'm just going to say this is a word of caution with this. And maybe it's useful advice, maybe it's not. I saw somebody post on X screenshots after this massive green candle. So this gap up on the 11th of September went up nearly 80% on the day. Pretty insane. And so after that close above $10, they post these screenshots of open and, another position that they have. And in all honesty, there's nothing that drives me more when people get really cocky and post screenshots without at least trimming, because I think that kind of like a good rule of thumb is, if you're going to take a screenshot to post to brag to your buddies that you've made a lot of money on paper, pause for a second. Maybe you don't want to take a screenshot. Maybe you want to take some profits or take a little off the table, trim a little. And I mean, I have no idea where this is going, but to return back to the 50-day simple moving average from where it closed at on Friday, that's like a 64% drop. Not saying that it's going to come back there, but it could. It closed at 907 when it was up over 10 the day before. So yeah, I think that it's good to kind of consider that. And also other things that, and maybe I'm going to be wrong about this. Maybe this does make new highs. But we do have higher highs in the stock price. We have lower highs in the volume. And look at the spread in this candle. It did go up a good amount. So on this day, it went up 42.5%. Got this big volume, but you didn't see much spread in that candle. So there's a divergence there. You also see actually, I'm going to get the message out of the way. Sorry, Anam, but hopefully what I'm talking about is useful. You see this big spike in volume, little spread in the candle. And then you also have the RSI here up to like 94. So that's massively overbought. You have this divergence here. Maybe, I don't think that there's much you could say with divergence from here with the RSI, but there's a divergence between the massive amount of volume and the spread of that candle. So what that's telling you is there might be a little bit of a pullback. And so what happened following that, it did gap up. This was, the opportunity to exit, in my view, or to trim before it pulled back over 50%. And, it's like if you exit here, if let's say you have 100 shares, you can then buy those 100 shares back down here. You could buy 200 shares down here. So that's something to consider. And then, thinking about the volume, the RSI, you have this massive spread in the candle over here. This is a gigantic candle, and it's up about 80%, like I said on the day. So on Thursday, the 11th of September. And we do have this spike in volume, so that volume has increased there, but it's nothing compared to over here. So here the volume is 1.9 billion shares traded. Over here, it's 1.05. So that's a little more than half, but it's pretty close to that. And you have this massive move up. So that tells me this volume isn't really supporting this move. So it's probably going to pull back. I could see it, let's say it doesn't come down to the 50-day simple moving average. Let's say it comes down to the close here. That was at 586. So I'm just going to try to, I'd have to adjust it up here. So 586, I could see it coming down to there. And from like the lows over here, let's do a little Fibonacci retracement. %50 is at 620. 618's at 513. So right around 6. Yeah, I mean, I could see price coming down to there. And I haven't even mentioned this. Like you have this divergence in the, like with the volume relative to the spread of the candle. It's the opposite of over here. Widespread or high volume with a small spread in the candle. Whereas over here, you do have a large amount of volume, but relatively it's lower with a wide spread in that candle. So there's divergence there. And then also you do see higher highs being put in the stock price, but you actually have lower highs being put in the RSI. Over here, it's 82.5. Over here, like I said, it's about 94.2. Lower highs in the RSI, lower highs in the volume, higher highs in the price. There's a lot of divergence there. So, I mean, you know, just like over here, you could sell all of the position or half the position. Let's say you got 200 shares here. You sell 100, and then you could buy 200 back down here for the same risk exposure, you know, in total in the investment. But going from here, you got 200 shares, sell half. So now you have 100. You buy 200 back here, you got a total of 300 shares. And then you can, you know, ride this up. So over here, you know, if this does continue higher, I think it could bleed. You know, I think that this could be a time suck, an opportunity cost. And so what I'm going to do is I'm just going to do a little bit of a path that, you know, here I could see this kind of, you know, do something like that, get people excited, but then it kind of fade, kind of whimper, come down here. And then maybe it starts to form a bear flag and just consolidate, really bore people out. And then it maybe flushes down to, you know, 50-day moving average or that 786, maybe not quite to the 786. People waiting for that, but it to not get there, kind of tease them, flush them out, and then, you know, it start to go up. So, I mean, that's like a month or something. So, yeah, I mean, and this part of it doesn't even have to happen. It could just come down. So I think that's a really good thing to think about, because let's say you got 100 shares up here at the top at $10 and it comes down to 6. So let's say you sell your 100 shares, it comes back to 6. I'm not the best at the math with that, but you could buy more shares for the same amount of money down at 6 than at 10. Not quite double, but getting close to there. If it comes down to here, that will be coming down to 5. So down to here, you could sell your 100 shares, buy them back down here. Buy back 200 or 100 at a discount. So that's something to think about. Yeah. So hopefully you guys find that useful. And then let's see. Anon is saying, yeah, it seems too high now. I won't buy it unless it goes back down to like 6 or 7. For me, like, and I think this is also part of the reason why I haven't been putting out like tons of videos. Like I remember when I was like starting to grow the channel to get monetized, I did like 3 to 5 videos a day for like the month of February. It's the shortest month of the year. I'm just going to focus, try to crank out a bunch of content. And, you know, I did, but like, was the analysis of any of that good? Some of it, but I would say probably the majority of it, probably not, because I feel like it's, you know, this stuff takes time. And actually, like a lot of that analysis, a lot of it was like whether it's penny stocks or stocks that were undergoing like reverse splits and things like that, dilution. Some of them have gone bankrupt. And I don't think that's going to happen with Open Door, but I think that it could be, you know, a good amount of time before we do see it, you know, go back up. So yeah, I mean, 80% in a day. That's what dreams are made of. You know, don't be too greedy with that. You can buy them back. Unless, you know, you want to do a long-term investment so you don't have short-term capital gains tax. You know, I could understand that. But, I mean, let's say, you know, your average is down here. Let's say at the red line, just arbitrary, whatever it is. And you go up here you got, almost 200% to the upside. And so whatever those taxes are, that's going to be, let's say, 30% of that. But then, so 30% of those gains, so not the total value, but just of the gains, 30%, okay? You've paid that 30% tax. So if it were to come down to here, like the 382, then it's like, okay, I could see you justifying holding it because you're just going to sell. And if you buy back at a 30% discount, you've had to sell, or you had to pay taxes about 30% of those profits. So that doesn't really make sense. But when you start to talk about it going down 40%, maybe 50%, then I think that you could start to think, well, actually, there is more of a benefit to taking profits on the short term, 30% or whatever tax it is. I don't know. I'm not a big tax person. And then you could buy them back here, and then you could go into that long-term, mindset. But everybody's got to do what works for them. But yeah, I do see that Anon is saying ASST. So that is, let's see, that is something Spacemobile. AST Spacemobile, is that right? ASST? Or no, this is asset entities. Hopefully this is what you're talking about. I was thinking of ASTS. So that's not what you're requesting, ASST. So I'll look that one up. I don't think I've ever looked at this chart. Yeah, so this one, this is interesting. This is kind of tough because it's like, and I'm not the best analyst. I just enjoy doing it, and it helps me to explain my thought process. But I could be very wrong about this. But what I see is this big red candle. So it comes down, and then it starts to consolidate. So that to me looks more like a bear flag. But I guess you could perhaps argue that you've got this green candle here, and then maybe it's starting to consolidate. But really, I think it's probably more like, pullback. You also have this gap down here. Maybe I want to put a line there just so you keep an eye on that gap. So gaps are always based on the closing price, seeing that price flow from market open or from market close to open. You want that gap to be filled. But gaps don't always have to be filled. If it does fill this gap, I do think there's a lot of support there because you have this consolidation over here. So I think that's nice. That gap's around $6 or $6.30, somewhere around there. Another thing that we can do is a Fibonacci extension, such as the trend-based Fib extension over here. And so I'm just going to do that from the low over here. Actually, no, I don't want to do that. That would be to suggest where it could be going to the upside. The bottom's not necessarily in here just yet. So what I want to do is actually take it from the top here. Let's assume that the top is in. Then it bounces from like the low over here and then goes up. And actually it went up a little bit higher, up to here. And so that 100% extension, which is just going to be the distance from here to here, but taken from that top down, that does seem to correspond pretty nicely with that 50-day simple moving average. That's around $5. Something that does look good about the chart is that it had broken below the 50-day simple moving average. I think it's funny. I have a hard time saying SMA, the 50 SMA. It's on the daily. Hopefully that's clear. But when I say 50 daily SMA, simple moving average. Anyways, I'm thinking too much about how I talk. But yeah, it broke down here, got rejected from the 50 SMA. And then it pulled back. And actually, let's look at that little pullback just out of curiosity. What is that? How is that represented with a Fibonacci retracement? Okay, and let's wait from here. That's what I'm thinking. So let's just do a little Fibonacci retracement from the low here to the high here. Where did it pull back to? It pulled back to that 618. Approximate. I think I maybe a little bit lower. But yeah, right around there. So that's 618, 375. The low was 371. Nice little pierce of that. Would have gotten an order filled and then bounced. So that looks really good. And then from that, I mean, this definitely, maybe there's an extension we could do from this that would kind of suggest where the top ended up being. I'd imagine maybe the 1618. 1618, look at that. Because, and the way that I guess that is, number one, I don't really have too many of these levels on for the fib extensions. I like the 100% and the 1618. And then I think maybe I have the 2618 as well, but that's just going to be way off the chart. But the reason why I thought that was going to be the 1618 is because this distance here is not as much as the distance here. That's much bigger. So it's like, well, it's probably not the 100%. I'd guess it's the 1618. And that was a good predictor of the top, right around $7. And ASST actually did hit a top on the 4th of September, hitting a high of $7.20. So that 618 would have, oh man, that 618 would have been, that 1618 would have been pierced. We actually went up higher. So, you know, but still, I think this is kind of good. You know, if you buy here and then trim at the 50-day simple moving average, buy back at, let's say, the 50%, the 618, and then also, like, you know, buy a quarter of a position at the 50%, then buy 3/4 of the position, or sorry, 2/4 of the position that you want, half of it. So you got 3/4 in total. And then if it does come down to the 786, then get that last quarter. And then you could see for the attempt to break out above. And so like buying here, if you had conviction in this, or like after earnings, you were impressed with it. Let's say you bought after earnings right around here. You know, that's an upside move to that 50-day simple moving average. 40%. So that's pretty nice. So let's say you trim half the position there. Then you could buy a good amount of that position back, more than what you sold, because you get a retracement. It's about 20% pullback. And then from there, you get this nice big move to the upside. And it's like, maybe, okay, well, I'll trim some at the 100%, but I don't want to sell all of my position unless it goes to the 1618. It goes up there, and then it's like, great. So then it's like, let's say you trim half of your position and you got your average. Let's say it's right around the 618 because, and this is all hypothetical, you know, I'm not in this. I'm just kind of like trying to map out, you know, how can we use these Fibonacci retracements, the moving averages and whatnot to our advantage to kind of map out trades. And so from here, let's say you had some down here and you sold, you know, let's say you sold half of your position up here. So you buy the other half back here, but then that puts your average at like the 786, the red line here, like 350, but let's just round up to 375 where that 618 is. And then we could see that move to the upside. It's like an 85% move. Let's say you trimmed half of it here and then the other half here. That's great. You made some money. You made from this 50%, here 85%. And then if you fully exit, then it's like, okay, well, I mean, it tested that 50-day simple moving average here. I want to see it pull back, retest, break out, and then pull back and retest that moving average. And that's exactly what happened here. So you don't even need to do a fib retracement on that, but let's actually do one just for fun. I might actually just zoom in on the y-axis. So, you know, we can see this a little bit better. So yeah, I'm just going to do it from the low here, then to the high. Just repeating basically the exact same thing that I did before. So from the low here to the high. Where did it pull back to? You know, it pulled back to right around the 786, and it did pierce that 50-day simple moving average. And so what one could do here is, you know, map this out and say, okay, well, I mean, in the past, it pulled back to the 618, but maybe it doesn't get all the way back to the 618. I could do a quarter at the 50, quarter at the 618, and then, you know, maybe another quarter of a position at the 50 simple moving average, and then get that last quarter at the 786. So you'd have your average right in here, and then you'd be in a very good position for that next leg up. And so let's say you got the top of the close on the 8th. Let's see, which was at a price of 533. So let's say from 533, right around there, up to the top, That's over 100% move. So, it's like this rinse and repeat, very, very nice. But like I said, what was happening here? Let's look at this, these moves. This, and actually let's just think about it from the lows here. What do we have? Because we have this massive spike in volume. I feel like that kind of is going to skew our analysis, but this is a really big spike, 91.3 million shares traded. So it's actually not a huge amount of volume. Over here, this is about 46 million shares traded. But what we can see is, following this pullback, that's a full and some retracement. But let's just take it from, the lows over here. What do we start to see? We see volume gradually increasing. So that looks good. We also see the RSI highs gradually getting higher. However, we kind of saw a flat top here, a top off or whatever. Here when it was topping, the RSI was at 72. Then over here, following that pullback a little bit, the RSI got up to as high as 71.24. So we're actually starting to see a little bit of a divergence here. And so I'll try to illustrate it where, let's see if I just do a little trend line. We have higher highs right here. But it's, effectively flat. I'm just going to hold down that shift key so we get a horizontal line there. And so that is weak bearish divergence. It would be like full on bearish divergence if this was lower highs. And I mean, technically it is a lower high in the RSI. But I mean, we do see this volume. So what I could see is potentially, another move up. Maybe it goes higher. I don't know anything about the company. I don't know anything about the fundamentals. Take what I'm saying with a grain of salt. But yeah, I would, if it does have another attempt back up to, let's see, it's at 850 at the close from Friday. Let's say there's another attempt to get back up to, the double digits. The high over here was 1260. So let's say there's another attempt to get back up there. Then you'd want to see, does it put in a lower high with the stock price? And does that correspond with a higher high? I can't really draw it because, let's see. Yeah, the RSI is, it's a little bit tough to draw a higher high there because I have to adjust the axis. But yeah, that would be a hidden bearish divergence, or if you see it start to continue to push higher, but then you actually get, let's see if I can get this line clicked. But you actually see the RSI be lower, then that would be bearish divergence. And then I would think that it's probably going to be coming down to 6 to 7. Fill that gap. I don't necessarily think it's coming down to the 50-day simple moving average, but it could. Another thing that I could do is look at the 200-day moving average. Unfortunately, I don't have a paid subscription. I can only do one moving average at a time. But, I assumed that was going to be lower. So I'll just put that back on the 50. So yeah, I mean, my thoughts are that there's going to be another push higher. It might get to new highs relative to over here, so above 1260. But I suspect if that happens, it's not going to be backed by a bigger volume spike than what we saw here. And actually the RSI is going to be lower, and so that will be suggesting weakness in that it has gotten exhausted. There isn't enough effort behind the move to the upside. And actually, if we do look at this, let's see the 4-hour time frame, just out of curiosity. Or sorry, the 1-hour time frame. And maybe I actually do want to go on a little bit shorter of a time frame, because you see this massive spike in volume for this 1 hour. And so that's gap up when the market opens, I believe. You see this gap up, and what's that volume doing? Is that volume buying? No, the volume's dumping. It pulled back. But, I mean, the volume it opened here, pushed up to here, so there was some buying, but then it did end up selling off. So what I think would be nice is to look at this on an even shorter time frame. I might do the 15-minute, and then we can see, what happened. Where was that volume? And so, yeah, I mean, this is some more, in my view, and maybe I'm misinterpreting this, but this is what I see as being some divergence because, okay, you see this gap, that's great. In the first 15 minutes, the market's open, you see this massive amount of volume. So there's a lot of buyers after this gap up. People are chasing, they're FOMOing in, they're wanting to get into this asset entities, ticker symbol ASST. But even with this massive amount of effort, that massive amount of volume, they're not really able to push it up that high. And then after that, the next 15 minutes, you get this massive wick down. And so that does suggest that buyers were stepping in, pushing this back up. However, how much effort was put into pushing that up? Not very much. So that suggests to me, and maybe I'm interpreting this incorrectly, that there weren't enough buyers to really push this up higher, just to hold it. People had bought here and then it had gotten exhausted, just enough to keep it here, not to push it higher. Although there is no divergence between this spread being smaller than the spread over here, lower volume, so that makes sense. But then you start to see the volume increase as the spread is increasing, though, to the downside. This right here, you got a bigger spread, lower volume. That suggests that sellers are starting to get tired of selling and that there might be a little bit of a bounce. Then you see a push up in volume, smaller spread in that candle, but then really volume just dies down. Buyers have gone away, buyers and sellers, and so this is just consolidating here. And even this is a pretty big candle right here on the 15-minute. That's up over 11% in that one candle. Over here, you had it up about 9.5%. And so this volume, about 190,000. This volume over here, so those candles are kind of, relatively similar. So we would want to see, the same things kind of reflected in the volume. And this did lead to, a little bit of a bounce, not huge, and so let's look at the volume behind that. So that volume, 190, over here, 81. So that suggests that there's not really as much there, although it did go up. So, I guess I'm wrong in that sense, just trying to interpret the data and stuff and, go over my thought process. But yeah, from that, I guess, yeah, because this is the thing, looking at this volume, I'm just going to do, something like that. I could maybe do it over to here. The general idea, though, is that as this is consolidating, volume's decreasing. So, one would think that's good. However, this spike in volume was met with the exhaustion of buyers and this pulling back. So in my view, this seems more like it's a bear flag because it's a downside move. Sure, gap up was great, but it then pulled back. Look at all of these candles here. So yeah, and you can think about it like this too. And again, maybe I'm wrong, but I'm just trying to understand the market. So I'm just going to zoom in on right here because I think this is like an important part of the chart. And I'm going to come over here to get my little rectangle tool. So what do we have right in here? And maybe I don't even go down because it's just a wick. What do we have right in here? We've got a lot of price action, buyers and sellers, shares trading hands. But then following that, where do we bounce to? We only got up to, let's see if I do a fib retracement. We got up to around the 382, not even the 50%, which would be around $10. maybe we did bounce up to there over here. So I'll extend this over. No, I mean, we didn't even really get to the 50%. And so, yeah, I mean, with that, you know, you have these attempts to get up higher, but then you have people here that maybe they bought the top, they chased, they FOMO'd in. That's what the candle kind of suggests is what happened. And then so now those people who FOMO'd in, you know, they see this pullback. Let's say they bought up here. Let's give them the benefit of the doubt and say, you know, just at this red line here, they've had to endure 16 to, you know, as low as 35% to the downside. And this is also taking place over 34, I mean, just from that time frame, this is 15 minutes, so I maybe should, you know, to interpret that. Let's see, actually, I'm not used to doing this on the shorter time frame, so I might just do this for a little experiment. I want to get that measurement tool and just see what it tells us. Here it says 77 bars, 2.5 days, so like 3 trading days. And so that's not really that long of a time to be 16 to 34% red. But maybe they're thinking, oh crap, I thought this was just going to keep going up. And so they panic and they don't know what they're going to do. And it's like, oh, I don't have any more cash. I can't buy. So if it just comes back up to my break even, you know, I made the wrong decision buying up here. So if it gets back up there, then I'll sell. And so what you have, you know, with this box over here, these are all sellers. These are all people. If people sold here, that's because they don't think the price, the value of ASST is worth it up here, at least not at that time, maybe, you know, shortly in the future, but maybe not. But, you know, you have sellers here. That's why this dropped. And then any buyers that were up here, I think they chased. I think they chased a lot of volatility. It was an emotional FOMO type of trade, and it pulled back. And so really what I think you have is with those buyers up there that are, you know, left holding the bag, I think that they're going to become sellers the next time this goes up. So there's really a lot of resistance, a lot of reasons to sell above if there is an attempt higher. Whereas, you know, look at what we have below us. There's nothing here. And so I think that nothingness needs to get filled. And even if I look at this on the daily, it's probably going to be kind of clumpy. But yeah, I mean, look at that gap. That gap needs to get filled. In my view, I could be wrong though. And yeah, so hopefully that was helpful, Anon. I do see some more people have joined. So Antoine, what's up? How's it going? And so Antoine's saying in this, he has calls on open. What are your thoughts on open? So I went over open at the very beginning of this. So I'd encourage you to check that out because I was really just like rambling about it. I kind of, and thank you for the super chat, by the way. I'm just going to pull this up so everybody can see. $3. Thank you, Antoine. I appreciate it. It's definitely very much appreciated. So thank you. And so I'm just going to pull back your comment here so I can follow up on it. And Bruce, I do see your comment as well. I will pull that up in a second. But I'm just going to go over this with Antoine. Just my thoughts on open. I mean, I was talking about somebody who had posted screenshots, and you know that was after this, like 10.5% move to the upside, or sorry, not 10.5%, nearly 80% move to the upside. And so my thoughts, I break it down. I didn't have anything up on the chart. You got the 50-day simple moving average down here, that blue line. That's at like 320. I don't think it's going to go down to that. But I do think, you know, we have this gap here. Filling that would be coming down to around $6. And what we have is lower highs in the volume corresponding with higher highs in the stock price. So there's some divergence there. And my understanding of the volume is that you want the effort behind the move to match. So this is a very big move, very widespread candle, 80% in a day. You want to have a really big candle, a really big volume backing that up. You want to have the effort matching it up. And you do have a really big candle. Here, over 1 billion shares traded on the 11th of September. However, over here, you got nearly 2 billion shares traded, higher volume with a lower spread candle. That suggested some divergence, and you got a pullback. And then also more divergence. That's bearish. If I said bullish, I meant bearish. But yeah, you have higher highs in the stock price and lower highs in the RSI. So that's bearish divergence. This could, however, if there's a move to the upside, I don't know what's going on with it in the overnight if it is trading. Market closed. So I do think that I'm new to looking at stuff in TradingView. I don't believe that it's trading overnight, but maybe I can pull it up in, let's see, over here. Yep, just after hours. So there's no overnight trading with it. But yeah, so I mean, I view, and I could be wrong about this, that there's another push to the upside, but that's just for like exit liquidity, and then it comes down. So, I mean, I've specifically avoided this stock because I don't know it. It seems like there's too much hype, and you know, I'm in AMC, GameStop, and Unity Software. That's enough for me. I don't need to be in any more hype plays or getting into a position that goes up massively and then doesn't recover for years. I don't know that it's going to happen. I don't think that's going to happen with Open. I think that this is a little bit more, you know, got some upside to it, but I think this would be like a month of time, and that's going to affect theta. That's going to affect your contracts. And so, you know, but at the same time, I could be wrong. This could push higher in the stock price, but if that's not backed by volume pushing higher, like to 2 billion shares, and RSI is not pushing to higher, which would be like over here. Sorry, actually, you can't see the RSI because the comment's there, so I might just hide your comment for a second. But yeah, it's lower highs in the RSI. Over here, it was 94.2. Here, it's 82.4. So if the stock price is going up, but I had to sneeze, but I didn't. I kept it in. So if the stock price is going up to new highs, you know, at least relative to the time frame here, if we're getting new highs and volume is not to like about 2 billion and RSI is not above 94.2 or whatever, I think that's not looking so good because there isn't the effort is not matching the moves. The volume is not matching the moves. The RSI, it's getting weaker as it goes higher, and that suggests a pullback. You got this gap here, so I could see this come down. And so, like, for me personally, like I said, I don't have a position in it. If I did hold calls on this, I have to be at work tomorrow during market hours, so I would probably just place limit sell at break even or, you know, something like that. I mean, if you're up though, then I limit. I mean, if I was up, you know, not giving any advice or anything, but if I was up on calls and then over the weekend, hey, I'm not at work, I got time to look at the chart. Let's see, I think it's going to keep going higher. But then I look at the chart and it's like, well, actually, you know, I want it to go higher, but actually looking at the data doesn't really suggest it. So I think it's probably going to be pulling back. Get out of those calls, and then maybe I could buy some shares down here if I want to be bullish on the company. Because when stuff gets really volatile like this, that means the premium on those contracts goes really high, and so it's expensive to buy them. Good to sell them, expensive to buy them. But, you know, with that, I can pull up, you know, max pain over here, and that is for open, and we can see what's going on with the max pain, 8, 650, 656. So well above max pain. I think there's probably going to be an effort. Actually, what did it close at? It closed at like 9 on Friday, right? Yeah, 918, something like that. 907 is what it closed at. There's going to be some effort to bring it back down to max pain, and also max pain is possibly going to rise. So it's like, the stock price being above max pain is like a magnet to max pain going up, but then also max pain is like a magnet to pull the price down. That's market makers, and that's also just sentiment, wanting the contracts to close in the money, or, retail wanting them to close in the money, but market makers wanting them to be, at max pain. So I could see this starting to come down. Like, I think that this move could fade for a month, and then maybe. And, actually, what I might do, and then maybe I'll do a video about it if it happens. I'm going to put an alert on open. And if that alert gets hit, then I'll do a video on it. And so my alert, I'm not going to do it at that gap, which is like, I think sub 6. I'm just going to do it at 6. If that goes off, then I'll check it out. And so that gap's at 586. So not even if that gap gets filled. And so that's what I'm going to wait for. I'm not buying it. I don't plan to buy it. I don't hold it. I would wait for that before I try to express any interest. The only thing that sucks about that, especially as like a YouTuber, is everybody's excited about open right now. Everybody's going to YouTube to watch it. Why? Because of the algorithm. The algorithm's pushing it. The algorithm's also pushing it in the market for people to buy their bags up here for exit liquidity before it pulls back. And then those people reload down here. Down here, though, retail's not going to be excited about open. They're going to think it's dead. But it might be around the 50-day simple moving average around there, support. And, then it takes off from there. So those are my thoughts on that. I might, not to look up anything in particular here. I just want to look up the net call and put premium. So I'm just going to pull up whatever contract. I just want this right here. And so what we see on Friday, the red line is net put premium. That went up, so that's bearish. And that net put premium went up by $3.37 million. But then on Friday, we also see in green, that's the net call premium. That went down, along with the stock price that's in yellow. And so that net call premium, it didn't go down by about 3.37 million to balance out the put premium. It came down by over $27 million. So that's people taking profits on their calls, big money, taking profits on their calls, and the net put premium going up. So maybe some people are starting to bet on it being bearish. Although this is not contract specific, I don't know if it's going up or down. But we can see the bear bull slider here. More on the bearish side, 52%. Not surprising. If we go back the past 7 days, this net call premium was going up. Net call premium went up by $73 million on Thursday. And then it came down by $27 million on Friday. So, yep. I think that's, look. Also, we have some news up here. Insider, which is, I guess, Al Liquidry or AI Liquidry. I don't know. Excuse me, LLC sold about 11,000 shares. And so let's see, 11,000 shares valued at around $9. So let's just pull up the very handy tool that I have here. It's called the calculator. And so I'm just going to plug in the exact same number right there. 10,874, 123. That many shares times, let's just do the closing price, which you guys can't see, but I can see it up here. It was 907. Or let's give it the benefit of the actually no, let's round it down. I don't want to make this seem too crazy. Let's just do it the closing price, 907. That's $98 million, about $100 million this person sold. Maybe they're getting a new house or something. I don't know. I don't know what's going on with that, but it doesn't seem like a good sign there. If I do come back to like the contracts over here, I can sort them. Let's see. I'm going to filter them by, what's this? Let's see if I can do $1 million. So this one that's got $1 million contract, millions of dollars over here. So let's say this one from, this is a leap, December 17th of 2027. This is a call, $3.50 call. Maybe that's not so interesting. Maybe because that's somebody taking profits or something. Oh yeah, these are purple. So what's the purple mean? Let's see. I think that means the volume is, or yeah, the volume is larger than the open interest. So this is kind of interesting. 14,000. That's a $7 call that expires in November of this year. So that's a little bit interesting. $7 call that's lower than where we're at. And that was a couple days ago. So we can actually look at that contract to see, was open interest going up or down. And so that order, I'm actually, let's see, sorry to come back to this. That was on September 4th. So if I open up that contract, it's a $7 call, November. And so if we look over here, I'm just going to scroll down so we can see the data in the table. And so for the 4th, that's right here, we've seen open interest increasing. So that's been good. So that was a buy, $7 call that expires in November. Open interest went up by about 15,000, a little shy of that. So there's just shy of 18,000 contracts traded on the 4th that led to about 15,000 open interest increase. And, open interest was 5.5 thousand contracts for this specific contract. And now it's 26,000. So that's a pretty big increase. There was some selling on Friday, though. It could just be because of the weekend, people wanting to take the risk off the table. I don't blame them. But still, there's a good amount of open interest. They are in the money calls on the 4th. Let's see where open was. Let's see, maybe it was below 7. So the high on the 4th was 6. And they're still holding. So, they bought out of the money calls. It moved up massively. They didn't sell into this. And so I think that means that they probably expect it to go higher, but I think it could be like an exit liquidity pump. Maybe it goes higher. I think it's going to be very important to pay attention to the volume, any divergence, RSI, all of that and stuff. So hopefully that was helpful. And again, I do want to thank you for the super chat. I do appreciate it. But then now, since Bruce has been waiting, he requested RZLV. Oh, and actually, sorry, Bruce, 1 second. Anton, Anand did mention something. Yep, the gap will fill eventually. It will eventually fill. And so that is, open interest. So yeah, I got an alert for $6. If it comes down to that, I'll reevaluate. Maybe, I've got something to go off of now on the chart here. But yeah, so Bruce's request, RZLV, I don't know it. So let's pull it up here. So RZLV. Resolve AI. Okay, so this to me this is 1 day. What is the market cap of this company? I'm not, okay, so it's a little bit behind me, but I could scroll. Key stats. Let's see, we got those. You can see them there. And actually, 5 days ago, NASDAQ net change percentage, gainers and losers. So this was a gainer, I imagine. But yeah, we see the market cap of 1.65 billion. I was a little bit skeptical, but over, like $1 billion, it's a big company and stuff. So I think that's good. I don't know anything about them though. So take my analysis with a grain of salt. But I think that, taking a step back like this, I think this looks potentially very good. And yeah, I'm never good at doing these trend lines. What I could see is, what do you got here? Potentially an inverse head and shoulders. However, we would be getting rejected here to pull back and make that right inverse shoulder. So I'll just draw what I'm thinking using the little inverse head and shoulders tool. And so I could do that from, I'll do it from the high here, but I could, make it lower. Then go to the low here, high here. So that's the left shoulder. And let's see, coming down to the head, the low there, coming back up to here. So that suggests there's the head. And so now what we need to do is pull back, form the right shoulder. And so how do I think that would happen? And why do I think that would happen? I'll talk about that in a second. But let's first do a little Fibonacci retracement just so we can get an idea of where it could be coming back to. And so I drew it kind of arbitrarily to around the 50% retracement, which would be around $4.30. I specifically drew that point to around $4.50. The 382 is around 5. And so either of those levels, let's see from here. If it were to come down, if price were to come down to 5, that's around a 30% drop. If it were to come down to the 50% retracement, that would be about a 43% drop in price from the highs. And then the 618 will be about 50%. Okay. And so my thoughts on this are that you also have something interesting here, which is the moving average, the 50-day moving average. And so let's say, because it kind of spiked up, let's say that continues to go up. Something like that, And so that could correspond with the bottom of the right shoulder, or wherever that is. I'm not saying it's going to be at 5, 430. I have no idea. Maybe it comes down to 350. I don't know. I mean, it could fake out, break below that moving average, and then that'd be a nice dip buying opportunity. But what I see with this is that it's likely going to be pulling back to one of these levels. No idea where. The reason why I think it's going to pull back is because you have these two big wicks up, multiple attempts to get higher. Let's see, what were the highs on these days? The highs 737 and then 754. So, it pushed higher, attempting to get into the 750s, but getting rejected. And let's see, here it closed at 679. Here it closed at 676. It actually closed a little bit lower. So while the candle is green here, the price actually closed, let's see, closed here 79.76. So it actually closed lower than the day before. But it gapped down and then pushed higher. But with that gap down and push higher, what happened? Oops. We saw a higher high in the stock price, but a lower high in the volume. Also, with this volume relative to prior spikes in volume, it's pretty elevated. And so with that volume being pretty elevated and the spread of the candles, so not the low to the high, but the open to the close of these candles, that spread's pretty narrow. And so there was a lot of effort, and that effort so here it pushed the stock price up 8.64%, a lot of effort. But then there's a little bit less effort, and it actually dropped the price by 0.44%. And so even with this relatively high volume to over here, it's not able to get it going. So I think it's probably going to pull back. Also with earnings here, with earnings, who knows? But I could see it doing something. I'm just going to do a little doodle. I'm not going to put too much thought into it. But I could see it doing something like this. Maybe earnings, it comes down, and then it starts to go up. And then from there, you have your inverse head and shoulders pattern. And from that, then you could start to talk about, where's this going? Where's this going to the upside? And to get an idea on that, we're going to do a fib extension. So that's just the trend-based fib extension tool here. And so I'm going to take that from the low over here, the base of the head, from the armpit here, and then down to wherever that shoulder takes us down to. And so that would suggest where price is going to. Another way you could do that, though, is by doing a measurement from the head here up And so I might just do that. So I'm just taking this trend tool, but I'm just doing it straight up like that. And then I'm just going to move it to wherever it'd break. And so that kind of suggests where price could be going. You know, so you got a couple different things here. One is that 100% move, and I'll show you how that comes to play, or how that comes to be. That's from the base of the head to the right here. And so I'm just going to move that to wherever it, you know, bottomed over here, right around here. And so that lines up with that 100%, the one there. It's a 100% extension. And that would be bringing price to around 11 bucks, it looks like. If it goes higher than that, that could be just the measurement from the head to the neckline, then taken from the break. And that could be suggesting like 13, 13.30, somewhere around there. But if it were to go even higher, the 1618 is around 15. So I feel like this has potential to get to $11 to $15 a share. But before that happens, we need to see from closing price about a 30% drawdown in price. And that could take a month or 2 weeks or so for it to pull back, maybe corresponding with earnings. And then that kind of launches it up as I have drawn. But then it's like, you know, from where price is currently at, it might be a month before price is back to where it's at. And then even if it does get up to the neckline, there's no guarantee that it's going to break the neckline or that it's going to break out. It might take months for that to happen. It's not going to go straight up like I've drawn. And so, you know, I'm just going to zoom in here. You know, there are a couple scenarios, I guess, in how this could play out when it gets to the neckline. And so one of those scenarios, oops, I need to hold that down. One of those scenarios is, hey, maybe there's a bull flag forming, but then it fakes you out and then it drops you. So that's a scenario. Head and shoulders don't always have to play out. Another scenario is that when it gets up here, it does form something that looks like a bull flag, but the data down here, the volume, the RSI, like RSI and volume are cooling off as this consolidates following that upside move. That would suggest it's a bull flag. If volume's increasing, RSI's increasing as this just consolidates, that suggests it's getting weaker and it's probably going to roll over. But if this is looking strong, if volume's supporting it, then, you know, you could get a breakout, retest, and then, you know, to the upside, to 11 to 15, stuff like that. So those are kind of the scenarios I'm seeing with it. But yeah, probably a pullback to around $5 at least, I think. But I could be wrong. And also, I didn't even talk about this. I was just talking about the volume. But look at that RSI. That's super overbought. And actually, I'm just gonna move your comment for a second so I can show you guys the RSI down there. So like over here, you got RSI getting above 70. So that's a high of 74 about. You know, stuff's starting to break out. Stuff's starting to, the trend is, you know, starting to reverse, reclaiming that 50-day simple moving average, retesting it as support and then bouncing. But then over here, when it does that, RSI, it's still, you know, like around 74. Now, I mean, super high, but that's, you know, it's looking overbought because that RSI is 88.61. On Thursday, it was 89.36. And that's kind of similar to, you know, like see this green here, just keep that in mind. I'm just going to pull up the open chart again. Look at this. Look what happened when that got into like the 90s. You know, let's say from here, it had like a 50% drawdown. So yeah, I mean, for RZLV, I think that there's going to be at least a 30% retracement down to $5. Could be coming down to $4 though. And you know, this is an example of maybe how stupid I am, or I think that, you know, you got to have fun with the numbers. Otherwise things are just boring. It's possible I get or could get alerts in TradingView, but I usually just have stuff in Webull. So I'm just going to pull it up here so I can put an alert here. And my alert, you probably guessed it, I'm going to make that alert at $4.20. And so for me, I'm not in this. I'm not touching it. I think that over the course of the next month, it could come down to, between 5 and 4. If it comes down to 420, that's fun. And maybe then we start to see, some support be formed down there. So that's what I would say. But yeah, I do have some more comments, so I will pull those up. And Anon. I'm not sure what this is referring to, but saying that it most likely be a 50% retracement. I think that with retracements, so I'm not sure if this is referring to RZLV or RZLV or open, but I think, it's kind of like if you're buying, if there's going to be a retracement and you're buying at the 236 or the 382, you're probably too early. If you're waiting to buy at the 618 or the 786, you might not get fills. But the 50%, that's a discount. And so you could start to buy back or start to build there. And if it goes down to the 618, then you can build a little more. You can add a little more, and then the 786. So yeah, I think that when doing fib retracements, generally, and it's also like, did you just propose to this stock? Are you, sworn to it or anything? No, there are tons of stocks. If it comes down to an interesting level, then it's interesting. But if it doesn't come down to that level, who cares? Forget about it. So I'd say that, at 420, that could potentially be a really nice time to start adding. And so I don't know this stock. I think that's appealing. But macro, big picture, I think that this could be, going back to, I imagine, were these IPO prices or something? I don't know why it looks very odd there. But I imagine it could be coming back to like 1150 to these prices over here. So I think that there's a lot of great potential with it, but there could be more potential down here. And so, Ebb and Flow Portfolio, what's up? How's it going? Trailing out long on RZLV. What's my take on AENT? Just going to drink some water and then I'll pull that chart up. And I am dehydrated. And I don't know if you guys noticed, I don't have a drink tonight other than the water. I actually haven't had a drop to drink in, I think, since last time I streamed. I had some wine. I still have that in the cabinet. Probably tastes like vinegar now. I didn't check. But yeah, I haven't had anything to drink. And hey, Bruce, you're welcome. Thanks for the request. It's fun to go over it. And I if 420 gets hit, I'll be curious to revisit the chart and maybe I'll do a video on it. We'll have to see. And AENT. Oh yeah, I was just saying. I didn't really drink at all over the past week, which I think that's really just because I didn't want to spend money. I usually just get every couple weeks I get paid. I get like a 6-pack or not a 6-pack. Maybe I get a few 6-packs. Or 4-packs, 6-packs, whatever, and then that lasts me a couple weeks. But I didn't get any beer this weekend. I think it's because I got a 4-pack of sours that are just terrible. I had 2 of them, and I got 2 left in my fridge, and it's just like I don't want to have them. So I just didn't get any beer this weekend. Didn't get anything to drink, and also I think maybe just a little bit of a detox. And also, I think across the board it's been kind of a rough week. So I think that. I don't know. Didn't want to go down. Yeah, I don't. For me personally, I don't have any problems with drinking or anything, but I think that usually when I do, it's like by myself at home, listening to music, going over charts and stuff, I felt like I wanted to be a little bit cleaner this past week, I guess. But yeah, let's go over AENT. And I should note that I have been streaming for more than an hour. So I am probably going to end the stream after this request. And this is Alliant Entertainment Holdings Corporation. So this is looking interesting. And so yeah, just to consider market cap, $334 million. I don't know what they do. But yeah, looking at this, okay, so this is kind of odd 'cause there's that big spike in volume. But if we scroll over here, I mean, things I like about this, I guess maybe I'll just doodle it out, my thought process. You know, kind of gets like a double bottom here, attempt to get above the 50-day, gets rejected, bounces, gets above the 50-day, retraces, retests as support, goes higher, then kind of gets a double top up here with lower volume on this spike, with lower RSI, if you can see it where the cursor is. So there's divergence there. Higher high in the stock price, lower high in volume, lower high in RSI. And then I'll continue the drawing. Then this comes down. Oh, actually, that's not what I wanted. I wanted a different tool, the marker. And then so it comes down, retests the 50-day, and then it just starts really like bouncing from it basically a number of times. It's, you know, very sloppy. It didn't do that. It looks like cursive. But yeah, this was earnings. So that seems like, you know, there was a dip below the 50-day, and that was bought up support. We do see, let's see, still higher highs. So I can, you know, draw this like that. I'm just going to delete my doodle. Higher highs in the stock price. We do have, you know, basically higher highs in the volume there. But then we do see a trend of lower highs in the RSI. So right here, this is going to be bearish divergence with higher highs, lower lows. And this is not just like 2 points. This is 1, 2, 3, 1, 2, 3. So that makes a more notable trend. So it does seem like it's bearish divergence. But if price starts to go up higher and RSI starts to break out, then that could be a very good look. And with this dip, the wick down on earnings, that could be very nice. Let's go to the 1 hour time frame. So what we actually see is, so this would have been in the after hours, or right at the end of the day, right before their earnings, I guess on the 11th in the morning. You know, price is going up and there's a big surge in volume. So a lot of people are buying it. But then maybe earnings was a little bit of a disappointment. I'm not sure. I don't know. Let's see. Does it say any information about it? Earnings and revenue. So the earnings reported, so this estimated at 0.07. They actually reported good earnings. So that was a beat, a surprise by 0.04. Is that earnings per share? I'm not sure. So that's great. The revenue, though, that was the issue, and that seems like that was the disappointing thing. They had a reported or an estimated $2.36 million in earnings, but they actually only reported, you know, about a little over 8 million less than that. So that's not so great. But if you also think about this, the surprise there was a 3.55% surprise to the downside as far as the revenue goes, but their earnings per share, I imagine, was a surprise to the upside, and that's 57% to the upside there. So I think that's, you know, while the business itself has not been performing as well, the stock is performing well. And actually, I mean, you really do want the underlying business to be performing well, I would imagine, and then that to lead into the stock price going up. If the stock price is going up, but actually like the core business, like the revenue is going down, maybe that's not such a great sign. But I mean, it did bounce from here. And so one thing that we can do with that, because there's a bounce, we got this high here to that low, it went up to about the 786. And so I guess that might be a level I'd keep an eye on. That's around $6.90 or 6.969. Gotta have fun with it. I think that could be a level that would be good to get above. So, do something like this, consolidate above there with decreasing volume, and then it could potentially, go up. But if it can't get up there, we do see, this is one thing that's nice following this, we do see decreasing volume. And so if you have a spike in volume, that could trigger this move up to get above that 786, consolidate above there, and then go higher. We do also have lower highs in the RSI corresponding with lower highs in the stock price. This is on the 1 hour. And so that's good. There's no bearish divergence there. So this one's tough, but let's look back on the daily here. Yeah, I'd kind of evaluate, can we get a close above Friday's high? So Friday's high was 694. So I'd like to see a close above 7. If we can get a close above 7, then this doodle that I have could play out. If, volume seems to be in line with that. Because, I mean, here, even looking at this on the daily, this is, what's this volume doing? Volume's decreasing. As this, I don't know, is that consolidating up there? Let's see. Yeah, so I don't know. I mean, this is a tough one, because it's just been so volatile. But yeah, I mean, so here you have a big green candle backed by a lot of volume. You have a big red candle that's about the same size. So this was up 18%. This is down 15%. So pretty similar. But with this downside move, you have lower volume. So that's showing some divergence, and this is on the downside. So that kind of makes me think that there isn't much effort needing to go into holding this up. It's wanting to come down, and so yeah, I mean, I'm not really sure. This is a tough one, but I mean, this is I believe this would be an inside bar because it's trading within this range here, but it's lower volume. So. And this is AENT. I'll pull it up in Webull to see if there's some overnight trading. No overnight trading on any of these. But yeah, I mean, that's kind of my thoughts on that one. So, I mean, hopefully that was helpful. And yeah, and you're saying the trailing out and the longs on RZLV, from what I just went over on this, I think that seems like a good plan, taking some of that risk off the table. And yeah, I mean, those are all of the chats that I see there. I don't see any new ones. So what I might do, since I've been streaming for about an hour and 20 minutes and I need to head to bed in about 10 minutes or so, so I'm not too tired tomorrow, I'm going to wind this stream down. So I will throw this up here. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And I also want to thank you guys for coming, hanging out. Antoine, thank you for the super chat. I do appreciate it. And yeah, it's been a fun time. And next Sunday, I'll be able to stream longer. And then also, not this coming week, but the next week, I'm taking it off work, trying to work on stuff at home. But I might try to do maybe like an afternoon stream, maybe get some ideas for some videos from you guys, whoever wants to join the streams, go over my thoughts. And so that could be a nice kind of way to, do Ethereum treasury company stuff in the morning, stream maybe after close for an hour, and then from that, put that together for a video, and yeah, just kind of experiment, because I'd like to quit the job next year, focus on the channel and trading really full time. And so that might be kind of fun and nice to do. But yeah, anyways, it's enough rambling for me. I'll let you guys get on with the rest of your evening. I'm going to get ready for bed. And so I will have, I might not have a video out tomorrow because the ETH data won't be updated until the next day. There's nothing over here. If I refresh this page, yeah, just the 8th up here, and nothing from the ETFs because the market's been closed. But yeah, I will see you guys in the next one. Thank you so much for joining, and have a great rest of your night and a great start to your week.